the amount of news coming our way is incredible. If you weren't watching news recently, you'd probably think that I was making things up, because there's so much coming our way. And I'm going to share a few things with you. One will be this clip, which absolutely completely coincides with what I was talking to my other friend 2 days ago, where her sister bought a unit, paid $10 deposit off the plan, so bought it off the plan, very important, put down 10% deposit, and now she's unable to get the finance for what will be revealed obvious reasons, and now she was asking her to lend her $100,000 and her aunt another $100,000. So 40 has been paid for, so that's $240,000. Now she is able to get another 160. So this whole unit is worth $400,000. Again, I think it's 1 bedroom. It's in Gosford, Central Coast, which I think is a huge rip of $400,000 for 1 bedroom unit outside of Sydney metropolitan area. But that's just another story. So people have made money on other properties in the past, and this is not her first, and they expect to continue to make money. See, what people don't understand is that you can make money, and this is what I said to her friend of mine, is that you can either expect that sometimes you will lose money, or you can be very miserable. So she's made money on one property, another. So you win, and then it's reasonable to expect that maybe during those 4 or 5 ventures you will not make money in one of them. But no, people want to continue to make money. So unrealistic expectations, overpriced, overpaid, off the plan property spells disaster.
The off-the-plan minefield, how falling property prices and low valuations can leave buyers in the lurch.
Yeah, so I just watched this was last night, and I thought this is exactly what's happening to my friend's sister. Anecdotal evidence and just sheer luck that, or chance that I was talking to a friend of mine, and she was telling me that her sister's story just absolutely completely coincides with this. It makes me think that there's so much of this going on. And well, this report, I mean, they do proper journalism, I suppose, and there's a lot more that meets the eye, and there's going to be a property developer in there, or at least a real estate agent who's going to give us more information. Alright, so here it is.
Off-the-plan buyers who signed contracts at the height of the boom are beginning to feel an uncomfortable squeeze. More than 100,000 units are in the pipeline over the next 2 years, and 60% of these were sold off the plan. But with prices sliding south, some buyers are facing legal action from developers and possible bankruptcy as they struggle to get the finance to pay for their off-the-plan purchase. Here's Rachel Proposoni.
This is another thing that made me think about the friend's sister situation, is that say this unit was $400,000, right? And she's put down $40,000, which is 10%. So now, if this unit is worth less than $360,000 now, she's better off just foregoing that 10%. But then, if that unit's actually worth now $300,000, which I think it is anyway, it was never worth $400,000, but anyway, she paid for that. So if it's worth $300,000 and she walks away, and the builder can only get $300,000 for it, and the $40,000 deposit that she forwent, I suppose, that makes this builder only get $340,000 for this unit. And not $400,000 that was sold for. So she may end, if she foregoes this deposit, she may end up having to pay the rest, or she may end up being sued, because again, the developer was banking on $400,000, and now after she foregoes the deposit and he sells it to someone else, he only gets $340,000. So he's $60,000 out of pocket. So this brings up another conundrum.
After
After 6 years of runaway prices, the housing market has slammed into reverse. Parts of Sydney have tumbled up to 9%, while Melbourne's inner east is off by 6%. While that's good news for people wanting to get into the market, it's not for those who bought an apartment off the plan in the last couple of years.
To someone who it's their biggest investment or their biggest life purchase, to have someone on the other end of the phone saying, oh, there's a problem that doesn't stack up with an valuation, you can imagine what runs through their mind, and it's quite stressful.
Confirming 3083 sold!
After signing on the
I just want to pause here. I'm not going to make any comments because I don't want to be called names, but have a look around that room. Let's have a look. This is how these things happened. This is how they sold all those apartments off the plan and who was selling them. Just saying. That's all. You make up your own mind and opinion. But yeah, this is what that is.
dotted line, some buyers are finding lenders are now valuing their off-the-plan property at a significantly lower amount. That makes it tricky to secure enough funding to finalise the deal. Mortgage broker Luke Camilleri says he's made several phone calls to clients who are in that dilemma.
The most recent one that comes to mind, they had bought in Western Sydney and about 3 or 4 years ago, and the valuation came in quite low.
The bank valued the property below the $680,000 the buyers agreed to pay for it. It meant they needed to find an extra $54,000 on top of their deposit and stamp duty. In the end, Mr. Camilleri says the buyers had to get creative to find the extra cash.
We've got a bathroom.
Buyer's advocate and author Miriam Sandcooler says committing to off the plan should always be approached with caution.
You can more or less be guaranteed that approximately 50% of the time, the properties may come in under the contract price.
Being unable to settle can create huge problems for buyers. In a worst-case scenario, a developer will sue.
Then they want to, again, see if they can negotiate for the developer to release them, and they'll have to usually forego their deposit for that, or they need to scramble and find some funds to cover any shortfall, or try and on-sell it to somebody else, or simply go through that default process and unfortunately wait for legal action to be taken against them.
Conveyancer Alex Sapunas says he's in damage control with many clients.
This year especially, a number of people coming to us with concerns where they initially signed 2 or 3 years ago, and now they're wanting us to sit down with them and go over what rights they have and how do they deal with a situation where they may not be able to settle the property.
I think what he's saying is that people are now reading their contracts and seeing what those contracts were saying, what they were actually signing when they were supposed to read those contracts. I feel absolutely no single ounce of sorrow for these people.
He says it's not just falling property prices that are impacting off-the-plan buyers.
2 or 3 years ago, when they went and saw their mortgage broker or their banker, they would have said to them, based on your current scenario, this is how much we're going to lend you. And their actual scenario hasn't changed, but the actual lending criteria has changed.
This is what it will look like, so...
That's left some buyers scrambling to find a lender that will take another look at their books.
That's looking onto Emma Road, which goes that way.
Investor Stephen Kendon has just settled on an apartment he bought in Sydney's Inner West 2 years ago. His existing lender gave in-principle funding approval in May this year, but 2 months later rejected his formal application.
We had some abnormal expenses, and they were looking at that as if they were standard expenses, but they weren't.
Mr. Kendon already had 2 mortgages with the lender.
Which made it even more surprising that we've got a suite of loans, if you want to call it that. We've got a good history of repaying our loans. We can demonstrate that we can pay the minimum or above on our loans.
In the end, Mr. Kendon was able to secure a loan with another provider. But his experience shows the banks are upping their scrutiny, and securing finance might not be so easy for everyone.
It's going to definitely get worse. I think a lot of people that have bought off the plan are going to hurt. Yeah.
I don't have too much more to add to that. Unfortunately, for those people, it's not looking good. Oh, by the way, overnight the 10-year United States 10-year Treasury rate has shot up above 3%. For those, and that was myself up until a few years ago, who don't understand what that means. It means that the international money markets price on money is going up. The interest rates are going up. The bond yields are going up where the bonds are coming down, because it's an inverse relationship between those two. And because in Australia, at least about, I think, 40% of funding that banks and lenders secure on wholesale money markets is done from overseas. So if the overseas interest rates are going up, guess what's going to happen to the local interest rates, no matter what the Reserve Bank of Australia does. With that, all the best, and we'll talk again next time.